Hey traders, Raghee here, and in this recap video, I'm going to dive into a trade that I took going into the close on the NQ. And part of this recap video is going to be as much about time frame selection as it is where we sit right now and some decisions that we can make based upon the current levels that are there. So first of all, the setup began with looking at a 1 minute. And the 1 minute, just based upon the shorter term time interval, is typically going to represent the least amount of risk. Mainly because where the lines and levels will end up on a 1 minute just are usually going to be a little closer in nature. So as will the waves width. The waves width will be narrower as well, which within the context of a downtrend is representing the other side of your risk, right? The 2 minute was the next one we were watching. Now, both these have less price movement by way of the kind of range that they're able to handle. So they are designed to do a couple very specific things. In fact, we were talking about tick charts going into the close as well. You know, popular tick charts would be things like the 89, 144, 233, 377. I've seen 512s, 610, but these are the ones that I've looked at for the most part. Short-term time frames are designed to do really two things well: limit your risk and also get you in early. So when people ask me, why would I look at a 1, 2, 3, or even a tick chart? Why would I look at these shorter term time frames? Because on some level you believe, 1, they're getting you in earlier, with 2, lower risk. And unless you have those two advantages on a short-term time frame, again, what does getting you in earlier really mean? If the market's suddenly taken off with a lot of momentum, you're going to be able to catch up, usually catch up meaning get a break, get a pause, get a correction more often or even just quickly on a short-term time frame. So even momentum players, not just trend followers, even momentum players will find it's just a quicker way to oftentimes get into a market, including intraday trend reversals, which are momentum plays as well. Again, one of the few ways that I'll look at market trends and intraday trading. So 1, 2, 3. Now the 3 minute almost, not quite, almost contained price action, but the 5, which is my typical go-to for quote unquote day trading. And the reason the 5, and it might seem very long in nature, but the reason the 5 minutes been my go-to has a lot to do with the cost per trade on specifically the foreign exchange and the Forex market. Because you're paying the spread, oftentimes what you're going to want to do is play slightly longer term intraday time frames, because again, if you have to pay a pip or a pip and a half, or back in the day when I was trading Forex in late 99, 2000, it was nothing to see a 5 or 7 wide spread, pip spread. So again, I just kind of got used to those slightly longer term compared to someone looking at a 1 or 3 minute chart. But 5 to me is an intraday time frame. And the 5 minute is going to require, 1, the most pronounced correction, and 2, it's typically going to allow you to tolerate more price movement. And that's exactly what the 5 did. You can see right here, this was a short. And then what's happening now? Let's talk about this going forward for those of you that maybe took this trade. And what we have is a very narrow Darvis during a fairly non-volatile, I don't think it's involatile such a word, during a very non-volatile series of hours. And you can see that through here, 4, 5, 6, 7 o'clock, as you can see there. So there's not a lot of volatility right now. And it's actually dropping below 12 to 14 points on average. It's actually 8 to 10 points. So my expectation for follow through going into the Asian session and throughout the Asian session until we get to about 8 a.m. Eastern is going to be much more muted. Now this narrow range, therefore, should not be a surprise. However, the narrow range in the blue sets up a potential momentum play either through the resistance, which I'd rather not see, or a breakdown through support, which is what I think follows the trend that was and the direction I'd like to see the market resume in. So that's where we sit right now on the NQ 5-minute. And again, what are some of the cues? Narrow range, preceding downtrend, correction, exhaustion within the Darvis resistance or the automated. This is just automatic support and resistance. That's really what it is. Automated support. So that area of resistance is what I'd like to see the market hold as where the offers are stacking up and keeping prices from moving higher. And then what I'd like to see is a breakdown. Now, there's a few things we can do. One, we can look for squeezes, short-term squeezes. 2, I can look for a negative MACD. 3, I can just look straight up for a break through the support of 67.90.5. Right? Those are all the things that I can look for to confirm that the market's taking on more bearishness. And by the way, that short, say through the floor of the automated support and resistance, that could be a short in and of itself, as could shorts along the resistance of this box, of these automated, it's not even a box anymore, I've taken the sides off it, but as could also the way in which you can see here, the way we're moving and exhausting at these levels, we can actually short off this level as well. All right, so that's a look at NQ going into the Asian session, and I'll see you in the premium update.